Neither China nor India. This is the country's central bank that has bought more gold this year. Japanese yen outlook looks weak, despite expectations of BOJ rate hike.
British pound edges higher on weaker dollar as UK political. Growth risks cap gains.
Hungarian forint, stable against euro as MBH, easing priced, ING. Venice price forecast, VVV risks bearish reversal amid easing demand and revenue.
Bitcoin price forecast. Persistent ETF outflows continue to limit recovery. Taiwan trade surplus grows in May.
Euro, pound price forecast, testing 2-week lows at 0.86 through the euro, as bearish pressure grows. Neither China nor India. This is the country's central bank that has bought more gold this year.
Australian dollar. Yield spread signal downside against US dollar. BBH. Australian dollar underperforms as RBA rate hike fears wane.
Investing Live European FX News Wrap. Markets consolidate as US CPI looms. South Africa GDP grows 0.6% in Q1.
Hey, welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance, because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hey, good morning. How you doing? The week continues. Risk on, risk off, those are the big questions. We're going to look at gold, oil, Bitcoin, and dollar, and we can look at anything else that you want. We're trying to figure out market sentiment as well as technicals and fundamentals. We're trying to figure out what the institutional investors are doing and line our trades up with them. We don't want to trade against them. We're interested in day trades, swing trades, and position trades. So we're going to use TradeRs to do this. We're going to execute through Trader's Way. TradeRs and Trader's Way. Makes sense. Just makes sense. So let me know what you want to do, and I'll be happy to address it. But don't ask me things like, hey, what do you think about this asset? Hey, what do you think about gold? Dude, we have all the analysis in the world. You should be worried not about what a YouTube guru thinks about a trade. You should be setting up your own trades. So please complete the poll. Are you very risk on or very risk off or somewhere in between? Let's start our morning routine with the sit rep report by Aiden. My machine's a little slow this morning. Guess I got to do a reboot sometime soon.
Good morning, I am Aiden. Let us get you up to speed on the latest market developments. Today's market sentiment is currently neutral and indecisive as participants weigh rising yields against signs of geopolitical easing. While the broader weekly trend remains firmly risk-off, the immediate 24-hour window shows a stabilization in risk assets. We are observing the U.S. 10-year yield holding at 4.552%, which continues to anchor the U.S. dollar's relative strength despite a minor daily pullback in the DXY. 1. Oil prices have dropped over 2% on hopes of a U.S.-Iran deal, providing some relief to global markets and supporting the Indian rupee. The Nasdaq is leading a tech rebound, up 1.5%, while the U.S. 10-year yield remains steady near 4.55%. Gold continues to see interest as central banks outside of China and India ramp up purchases. Investors are now shifting focus toward tomorrow's U.S. CPI report, which will be the next major driver for interest rate expectations.
Yep.
Biggest movers right now: volatility index, S&P 500, U.S. oil, and Brent crude oil are down. Nikkei 225 is up.
Yeah, oil down and S&P 500? What? Sort of a mixed bag. Sort of a mixed bag. Take a look at our risk. Big recovery. We're okay, but we're not out of the woods yet. Nikkei, big winner. S&P 500, a big loser. Maybe today's a catch-up day. I forget. I don't know. I want to jump straight into it. Kiwi was strong. We were looking for it to get weak last night. Looks like it never did. That was from last night's meeting. We looked at longer-term institutional positioning for Kiwi, and they were net short. And but so we wanted, or our hypotheses, right? Our trade plan was anchored around Kiwi weakness. But then we pulled up the charts, right? Like the day trading radar, And they were strong at the moment, but we were looking for weakness. So we said, well, we'll hold back. We'll wait for the Asia Open to see when new flows come in if they weaken. And they did not weaken. We wanted to see Swiss franc weaken, and it's weak. Yeah, so that worked out. CAD and Aussie and Euro are kind of monkeys in the middle. Dollar is weak right now, which is great because that's a risk on mode. Metals are a risk on asset right now, so that's risk on. So that kind of points to maybe S&P 500 up later today. Right now, it's still bearish, but the market's not open. Risk in general is still a little bit negative, despite some of these assets showing some risk on. Okay, but not everything. Oil's down, which is good. This is why Aiden mentioned the Indian rupee stabilizing, because if India doesn't have to flood the market with Indian rupee just to buy some oil at high, ridiculous prices, then that's good. It helps stem the weakness. So, they say Indian rupee strong, for the day, but it's been terribly weak. But is it strong, or is it just not as weak? It depends on your point of view. So, how do you set this up into trades? Kiwi strong, which is very unfortunate because, our planning last night, or I should say my plan, it's my mistake. Our bias was today might show New Zealand dollar weakness. Well, clearly it didn't. I can see right away pound strength as well. And the other stuff is like, it's okay. It's okay. Yep. A lot of bullish pairs, not very many bearish pairs. And the bearish pairs are all Kiwi, buy Kiwi, buy Kiwi, buy Kiwi. Now, we could still take a longer term point of view and step back and say, well, Kiwi's strong today. Is it strong in general? When I do that, I like to have this view. And it's gone from weak to the middle. Wonder if there's going to be a transition. Is it going to continue to stay strong? Well, we don't see institutional investors buying it. So we'll split here and go into the swing trade and see where Kiwi fits into this. And on swing trades, we have sell Kiwi, right? Sell Kiwi, sell Kiwi, sell Kiwi, sell Kiwi. So Kiwi's strong today, but in general, again, just looking at, what we're doing on this page is we're just looking at the charts, price action. That's it. We're not saying what should be. We're just telling you what is. So today, the Kiwi is strong. If you step back in time, which means go to a higher time frame, like move from a 15-minute chart to a 4-hour chart, different point of view. So the day trade is bullish for Kiwi, but the swing trade is bearish. They're both correct. The thing is, if the swing trade remains Kiwi bearish, then if or when the current strength fades, then you got a bigger drop in New Zealand dollar prices, aka swing short. So that didn't happen overnight. That was the plan. Like, we recognized it was strong, so we didn't short, even though we were bears. Good. But it never did. It never did weaken. Bad. So you wait. But now what? Do you want to buy all the stuff we want to sell? No, maybe not. So what's the next one? Pound dollar up, euro dollar up, pound Swissy up, pound yen up, pound CAD up. Okay, so let's look at the market open. Let's just look at pound pairs. Pound Aussie, the best opportunity. See, we organize things by probability. So when you decide, hey, I'm thinking about buying some pound today, going into the market open, you can look at it immediately. Pound Aussie is your best opportunity. Pound Swissy, second best. Pound Kiwi, third best. Okay. Pound yen is actually neutral. Technically, it's bullish, and fundamentally, it's bullish. But the differential between yen and pound at the moment is basically zero. Okay, you see that? Just want to look at 3 time frames here. Pound Swissy, bullish on 3 time frames. Maybe that helps. Yeah, it's the second best position trade. USD Swiss franc still, but I don't like the mixed bag. It did perform, but against all odds. So take a look at me now. Yeah. But pound Swissy better. Interesting to see if that wakes up. So these are daily candles. You can see it's not really trending, but you could look at it differently and say, well, we bottomed out at the end of the first quarter and have been up since then and made a big pullback, higher low and higher high. So could this continue? Yeah. Then I would look over at seasonality. Do I have it? No. Pound Swissy. Anything close to it? Pound yen? No, can't. I don't have the data to get that type of insight. Now, there was a headline asking, hey, India and, central banks are buying gold, but the biggest buyers are not India and China. It was kind of a question. I mean, let's see if we can, let's go back to it. Headline radar. Is it gone? Yeah, it's gone. Anyway, so it was saying, hey, central banks are buying gold, but it's not the ones you think. So it was
Investing live.
implying that, like, hey, who do you think is buying gold if it's not India or China? I mean, they are, but like, who's buying more? And so we have all this data. And the answer is Poland, followed by Uzbekistan. Yeah. So maybe Poland is trying to weaken their currency without adjusting their balance sheet. Or maybe they're pegging their currency to gold instead of the dollar. Turkey is selling gold as fast as they can. So is Russia. They need money. Azerbaijan's selling gold. I'd really have to think about this. But Baku is I think the capital. I don't know if it's the capital, but Baku is in Azerbaijan, which is on the Caspian Sea. And it's basically the same region Iran gets a lot of oil. It's actually down from the mountains and into the sea, but anyways, it's an oil area. And next to it is Russia. The Soviets took over Baku. So back in the day, the Western world built oil infrastructure in and around Baku. Baku became one of the wealthiest areas in the region by far, and had things like the largest, opera house outside of London and Paris or something like that, right? And then the Soviets came in and ruined everything, socialist pig dogs. And now, but it gives you a sense, like, the Russian border is not far, and these guys were in the Soviet Union, and then of course that collapsed, right? So now Baku and Azerbaijan, they make money on oil that they take out from the Caspian Sea. They also have nat gas that just comes right out of the ground. Pretty amazing stuff. Even the Egyptian pharaohs would travel to go see it. So it's been a tourist destination. Kind of an interesting spot. So, okay, so what I'm getting at is, well, they have to deal with those pesky Russians on their border, and Russia's in the middle of the war. But they also have oil prices, oil supply, oil something being impacted. Maybe even though Baku oil or Azerbaijani oil is not Russian oil, but what if the infrastructure means that it has to go through Russian oil infrastructure and therefore is negatively impacted by sanctions and stuff? I don't know what's going on there, but something's going on, and they're surviving by selling gold. So is Russia. Yeah. And Turkey has no foreign exchange, and they have heavy debt, so they're essentially paying for it with gold. So there's stuff going on. It's interesting to think about. But most people don't know any of this is going on, which is interesting. So if you want your your gold to go back to 5,000, you better get the Turks to stop selling. Ooh. Wow. That's radically different, huh? Looks like people started locking in that 5-0. Yeah. suddenly just dramatically, boom. But long end of the curve, not yield, not low end. Long end, they're locking in the 5-0. So they don't want to buy short-term treasuries because it seems, if you look at the 1 year, okay, the market is saying, if I buy a treasury that's, less than a year, it would be a bad deal because they think the Fed in the next year is going to raise interest rates. So they'll wait. It's kind of what this is implying. In fact, no, we don't track like a 9-month treasury, if there is such a thing. But we can see that in the next 6 months, the Fed is going to raise interest rates according to yield curve analysis. Okay. But the psychological level of 5-0, hey man, that's a big number for a lot of institutions to hit their mandates, or otherwise known as their hurdle rate. So, like we discussed this before, if it was an insurance company insuring your mortgage, and they do calculations, and they're like, well, we need to hedge the risk for the next 30 years, and our calculations show that we need to hit 5% to be able to be neutral on the risk, then that hurdle rate, that 5%, when you get the 30-year above 5%, these insurance companies are just going to want to buy it to hedge their risk. Their mathematically derived perceived risk. So there were some buyers in the last couple of days, huh? In a period in which we had nothing but sellers. Is that a turning point? Could be. They're willing to take the risk. Cool. So now where do we want to go? See, we're bearish on New Zealand, but it's strong today. Boom, 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 boom. Boom, yeah, so and maybe you prefer this view, but when you take a quick look here, we're not very happy with New Zealand in the long run. So this is no charts, just econ data. So if you were going to look at this, Aussie Kiwi makes the most sense. And we did actually see that. Like, didn't we see that in the confluence radar? Wasn't that the big one? That's interesting because that's derived in a completely different manner than this. But we're not happy with New Zealand for all these reasons. Yeah. Cool. We also analyze the value of their currency. Okay. So we're taking these calculations in there as well. So the value of their currency and the economic data, not happy with New Zealand and okay. Aussie? Well, we got interest rate decision coming soon. Maybe that'll change us. Maybe the raising interest rates creates a better carry trade, but maybe it slows the Australian economy down. The UK also, if you want to think of it, catches a bid here. And pound is one of the strong currencies. So this is what I was saying about long-term long and short-term short. So, like, for example, last night, Kiwi got strong, and I said, well, you got to have a bias. You got to have a plan. What's the plan? Well, New Zealand has been weak, but it's strong. So let's look for it to roll over from strong back to weak. Okay, so there's your bias. And then it never did happen. So the trade didn't produce. It doesn't mean you'd lose money, because this is what technical analysis does. If it never rolled over, you never had a trade opportunity. Remember, if you're a bear, or even a bull, entering a trade on a chart is not complicated. So if you're listening to a YouTube guru that makes it complicated, dump that guru. So let's take a classic example. Last night, Kiwi was strong. We said, wow, but we're long-term bears, so we're looking at selling it high. Okay, great. The thing that keeps you safe in trading is technical analysis. You only sell lower highs. So if it was strong at the New York close and continued to be strong through Asia and continued to be strong through the European session, and now we're going into New York and it's still not weak, it just hasn't made a lower high. Okay? So we had this, and then we got something like this when we did our analysis. So now we're looking for lower highs and lower lows. But if it's been doing this all night, well, it never got weak. There's no trade. You're waiting for stuff like this. Well, there's your, lower low, lower high. Cool. And now you would engage. So you could still be waiting and say, well, my bias is bearish on Kiwi, but Kiwi's strong. Well, that's good, because you want to look at that short-term uptrend and then engage when you can confirm the long-term downtrend is resuming. So it could be up for a day or two, but down for a week or two. That's what you're trying to uncover. All right. So what we did also want is maybe some Swissy weakness. That makes sense. CAD could be weak. We do have a central bank meeting coming up, but oil dropped again, and Canada's economic situation is a mess. How do I know? Did you look at the scorecard? It's a mess. Okay, so you know that. So if CAD is weak today, you look for opportunities to sell the CAD. If Swiss franc is weak today, you look for the opportunity to sell the Swiss franc. Cool. If euro, pound, or Aussie are strong today, you look to buy them. So Aussie Kiwi, Aussie CAD, all that kind of stuff. So how do you translate that into a trade? Because that's what you're constantly thinking, right? You're like, Wayne, this is nice. I like the pretty colors. Oh, good. You know something about the economy. Great, 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 great. What trade do I do? Well, first of all, you should be able to think. Okay. You want to buy these things and you want to sell these things. Can you figure out what to do next? You should be able to. But you can go to day trading first and line these things up, maybe. How's Aussie doing today? Meh. How's pound? Great. Cool. Put that on your radar. How's euro doing? Yeah, about right. Swiss franc? Yeah, okay. Put that on your radar. CAD is weak. Mediocre today. Kiwi's weak, but it's strong. Whoa. Okay. Well, maybe that rolls over. So you definitely don't want to buy it even though it's strong, but maybe later you can sell it. Cool. So what are the buying opportunities? You want to start with Australian dollar. Okay. What do you think? Pound CAD is technically the best, or sorry, pound Aussie. Yeah, but you're playing them together. That's not ideal. It's working, but it's not ideal. Okay, Euro Aussie. Yeah, okay. Fundamentally, it's not that great, but it's working. Aussie Swiss franc. Aussie Swiss franc. Now you're talking. Okay. So now you want to look for opportunities where this is going up. Doesn't look great now, so you wait. Aussie Kiwi. All right. That's the big winner. That should be going up. Is it going up? No, that doesn't look up. Okay. Wait later. So Kiwi is stronger than Aussie today. But if it turns the other way where Aussie is stronger than Kiwi, the probability of that running for longer is higher. So this is dropping. Okay, great. Doesn't make it a good trade. This is just what is happening. We got a lot of volume and volatility. So right now, the trades are happening. So like that's a half decent trade, pound Aussie. It's definitely bullish. It's definitely making higher highs and higher lows. It's definitely making a projection over the next 14, 15-minute candles. Okay. So what is that, 3.5 hours? We'll just pretend it's 4. 4 hours, over the next 4 hours, it looks up. But it doesn't make sense if you're talking about 4 weeks. For 4 hours, that is happening. You see? So your day trade could just be go ahead and find a pound pair or an Aussie pair and do what needs to get done today. Okay, this looks better to me. That looks okay. 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 So that's fine. I prefer the pound. And then the next thing I would do is say, put pound, Aussie Kiwi on the radar for later, but long. So it doesn't look like it'll happen today. Maybe tomorrow. Maybe next week. But put it on your radar to watch. And it wouldn't be a day trade. It'd be a swing or a position trade. Because it's macro based, not technically based. Kiwi CAD is a stay away. You can see right now the The projection is sideways, not good. Kiwi yen is making a higher high, which is great, but it's just not projecting well. And for whatever, this is good, this is mediocre, this is good. That's how you do it. Take a look at the upcoming week. Canadian trade, U.S. trade balance. Okay. This evening, Japanese PPI. No way. All very, very exciting stuff. Tomorrow, here we got CPI, and we're expected to be over the 4 handle. And of course, that will make people say, oh my God, inflation's out of control. The Fed should raise interest rates. Well, again, it's out of control because we have an exogenous supply shock. And you can raise interest rates all you want. All you're going to do is increase unemployment and create a recession. It won't bring prices down. I mean, I suppose if enough people lose their jobs in a recession, then they would have no need to drive to work. So then demand for gasoline would fall, and then demand for WTI would fall. That would actually take a long time for that to happen because we already made the gasoline for the next 6 months. So that doesn't sound good. That's like I don't know, killing the patient to cure the cancer. But you know what would change that is just one day. It could be tomorrow. We do a peace deal with Iran. Straits of Hormuz open, and the oil starts flowing. And even though it'll take a very long time to get back to normal, the threat of more bad would go away, and prices would stabilize, and CPI inflation would come down. So the Fed can't do a damn thing about inflation right now unless they kill the economy and increase unemployment. But that goes against one of their mandates. And Trump or Iran or whoever can fix the issue instantly. So it doesn't make a lot of sense for the Fed to raise interest rates unless they do think the employment situation is too good. But that's always a weird thing, isn't it? We think too many people have jobs, they're making too much money. And that's where I think capitalism gets better than government, right? So you're like, well, what do you mean things are, too expensive? And they'll say, well, look at housing prices in California. So we should raise interest rates. No, you should build more houses. How about that? So anyways, Bank of Canada on Wednesday after the CPI. So tomorrow's an interesting day. Nice little day, huh? Macro Sven says if people join the military because they can't get a job. I don't think that's true. I know a lot of people in the military. I don't recall any of them joining because they needed a job. Maybe that's true in other countries. That that doesn't seem to be the American way. Yeah, I'm trying to think. I'm going through all the people I know in the military, and they're like, "Well, I couldn't get a job, so I joined the military." Is that right? Okay. Yeah, like I said, I only know the people I know, right? So that's interesting. Just out of curiosity, do you mind saying where that is? Where you say where I'm from? Yeah. Where is it? Maybe 25% are there because of it. From an economist point of view, that's interesting. You know, you're like, well, I live in the Rust Belt, right? So Thursday we got ECB, Portugal. Yeah. So that may be the difference, though, Sven. Like I said, I know many people in the U.S. military, and none of them joined for a job. I really, um, maybe a green card, but not because there was no work. Maybe it's the easier way to get a green card. Let me think of other examples. Um, I tried. I actually joined the U.S. military as a Canadian citizen with a green card. Um, but then those things are rare. Of so most people in the military are Americans, right? And so then I know people. For example, I had a really good friend when I lived in the Silicon Valley doing my VC stuff. Um, he was a hardcore entrepreneur, and he was knee deep in a business. You know, he had his own company, and everything was going great. And then 9/11 happened. Boom, and he shut down right his business, and I think he joined the Navy in intelligence. I think it was. But anyways, he joined the military just like that. The Twin Towers went down. He joined the military. He's like, I'm an American. They attacked America. I signed up. That or I know a few people that were just born to be military guys. Huh? They're just big dudes with beards, and they like guns, right? And the most capable humans on Earth, right? They were just born to, you know, to protect the sheep. Shepherds, right? These are the guys that you're like, help, and they're like, yep, we'll come get you. So, anyways, Thursday ECB, and we got PPI. We got it twice, and then we have a core PPI, which I don't need. So I'm going to kill the core. Yes, Sven, Portugal is a unique place in which so many people move out of Portugal to get work that there's, I remember reading articles of elementary schools being converted into retirement homes. They had too many schools because there's no kids. Everybody left. The parents left for work. They moved to England or something. And then what? No one was taking care of the old people. So it's quite an interesting thing. Portugal's a nice place. People were nice. Food was good. So we got 10 minutes till this Canadian news, but it's not that big of a deal. So I don't know. Do you guys want to stick around and watch Canadian international merchandise trade data? Probably, what, another big day in oil? So you could sit on this throughout the day and just make sure that you're not missing the market change. So, for example, to figure out the value of the New Zealand dollar, we have to do 15 calculations. You could just look at that. We use this throughout our platform. But if, as you trade, you should eyeball and notice if pound jumps above Kiwi because pound got even stronger or Kiwi got less strong. Now, New Zealand dollar is twice the strength of the pound. Now, that's a hard thing to do because, the New Zealand purchasing power parity and, the value of one Kiwi dollar versus 1 pound relative to, M1 and M2 and M3 if you're a money supply person. Right? But this is why we do the indices. So in that case, because, when you look at, like, let's say Kiwi dollar going up, you don't really know if it's the Kiwi strong or the US dollar weak. Now, we do the calculation. And so what we're doing is we look at New Zealand dollar versus all the major pairs to derive the value of so we can isolate the value of the New Zealand dollar itself. And then we do the same thing. We look at the US dollar versus all, right? Well, let me show you. USD yen, Aussie dollar, Kiwi dollar, dollar Swissy, Euro dollar, dollar CAD, pound dollar. We do all the calculations, basis and quote comparison, and then we derive the actual value of the dollar by filtering out the value of the pound and the value of the Swissy and the value of everything else. So that's what an index is doing. So we know, like, here the US dollar is this. And notice that we're not reporting the value or pricing of the dollar dollar index futures contract or something. We're making our own index. So this is just our calculations of all the Forex pairs we care about. And we do it for everything. And so we can reverse engineer and derive the actual value of the New Zealand dollar. And we can see that it's twice as strong right in the moment as the pound. And the pound is as strong as the Japanese yen is weak, which is nice. So you could definitely consider a pound yen and a pound dollar long. And you can say, well, Kiwi's strong, but I don't like it. So I'll just do the pound pairs first, you see. Now, you can look at this view, or you can just say, well, just do the matching for me. Okay, and that's what this is doing. Or the signal cards. Bullish, 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 bearish, bearish, bearish. Okay, other. It's all the same data. You can just change the view. Now, you can pay money for a squawk box, where you, instead of sitting on this, you can use our squawk box, which is free.
Gold price forecast. Gold US dollar holds losses below 4,360 despite a softer US dollar. United States dollar index slumps to near 99.75 due to Iran deal hopes.
Okay, so you can listen to the news. You can watch your charts, or you can watch our charts. You're like, oh, look at that. I wonder if that's going to be a double bottom on the S&P 500. Yeah, well, that's some good thinking. But also, look at this. You're actually watching these other markets right now. S&P 500 is bearish, so if you want to continue, then this is actually selling, huh? You're like, what double bottom? This is a dog with fleas. But this is a nice, easy way to see the biggest movers. These are the biggest, most bullish. These are the most bearish. Why would you be interested in anything else? Well, Wayne, I specialize in mediocrity. I like to trade the things that don't move. Really? I only laugh because we've all done it, huh? The market is freaking out and you jump into something and you just sit there doing nothing for 3 hours. Meanwhile, everything else is on fire. Yeah. Speaking about fleas, have you heard about that fly that has shown up in Texas? Of a fly usually, grows in dead animals, right? So it finds a carcass and a fly lands on it and it lays its larva and it eats the dead carcass, and then the flies fly away. And the worms turn into flies and fly away. Dude, this stuff, it gets in you and the little worms eat your skin. Like your dead flesh, but it's eating your muscles and your skin while you're alive. Oh, snap. Yeah, the fly lands on you, and a week later, you got worms in your. Ugh, it's eating you alive. Ugh. Yeah. Here's our trade balance. Bigger the number, negative number, the better.
Spike alert, 90 seconds until United States U.S. trade balance is released. United States U.S. trade balance is released.
Does that mean I think I have it open twice? Yeah, I do. All right, I'll shut that. It's nice to get these warnings, though, huh? So it says negative 56 billion. I'd like to see negative 65. The badder the number, the gooder it is, in my humble opinion. That just throw up a volatility warning? Oh my God. I didn't even ask him to do that. How funny.
Canada exports up to 75.16B in April from previous 72.77 pre-round.
Canada International Merchandise Trade registered at 272B, above expectations 2.6B in April. Gold holds steady as traders weigh Middle East optimism against hawkish Fed outlook. Euro. Safe haven appeal grows with structural boosters, BNP Paribas.
United States ADP employment change. 4-week average increases to 29K. Mexico headline inflation rose by less than anticipated, MXN to retain the soft tone. Sterling today, pound gains as tech rebound eases risk-off pressure.
Stocks higher, yields lower, and oil lower, leading to a lower dollar is the formula today.
Wall Street might open moderately up.
United States goods trade balance dipped from previous 82.4B to 83.7B in April.
Nice.
U.S. international trade balance for April, 55.9B versus 56.1B estimate.
Next up, Japanese Producer Price Index in 11 hours, 17 minutes, and 53 seconds. So again, the way that this page is designed, this Squawk Box, is you can load this page and then minimize it and just stare at your charts all day, go through your charts. So you got your trading platform open. You have this minimized so you don't see it. It's not in your way. But as you're trading, it keeps reading you the relevant headline news. You notice it's all relevant. This is only news headlines a trader would care about. So you never take your eyes off the chart. Yeah. Or you can have it running on. So if you have multiple screens, like a lot of people do, you have this running on one screen, so you hear the news, but you can also just glance over.
United States-U.S. trade balance, actual 55.9 billion, met forecast.
You can always eyeball the charts as it cycles through. This cycles through all the 15-minute charts. So you're like, oh yeah, maybe I should be shorting the FTSE. Yeah, you stink. So I want you to use these tools. This is free. This is absolutely, totally free. It cost me a lot of money to build it. Cost me a lot of money to run it. This is very, very, very expensive, but it doesn't cost you any money. So you should use it. And it takes, I don't know, 15 seconds to sign up. Cool. No credit card needed. No tricks. There's no sales funnel. Cool. So I will see you at 4 p.m. If you are a member of traders.com or a subscriber to our platform, I'll see you at 4 if you're part of the live trading group.